Article 209 of the Constitution of Kenya allows the national and county governments to levy taxes and charges to raise revenue. The national government is charged with imposing value-added tax, VAT, and custom duty, among others, while the county governments may impose entertainment taxes, property taxes, or others as allowed under an Act of Parliament. Hello and welcome to this episode as we look into the taxes imposed on land and where they originated from. I, hosting this episode, I'm Daniel Wainaina. So, what are the taxes imposed on land? We are going to look into them one by one. Number 1. Land lists. This is a tax imposed by county governments within a municipality or township. Rates are payable in respect to the services such as water, sanitation, sewerage services provided by the county. Whereas the county may not provide the services, it is mandatory for landowners to pay the rates imposed on the property. The imposition of rates is provided under the Rating Act. Variation for Rating Acts empowers the county governments to vary land for the purpose of determining the rates. However, there are some lands exempted from this tax, such as land used for educational institutions, public religious worship centers, and cemeteries. Number 2. Land rent. This is a tax that is payable if the land is a leasehold. It is the same such a case when you rent a room in an apartment. It is a rental amount payable to the lessor. In most cases, the lessor is the government, a state or county government. The rent is payable to the lessor every year before the end of January. That's the case in Kenya. Number 3 is the income tax. This is a provision in the Income Tax Act (ITA), which provides the framework for imposing of taxes from others' lands. The taxes payable here with respect to the land are capital gain tax and tax on rental income. Capital gains tax is a tax chargeable on the gain of transfer of land, building, or shares. The tax was reintroduced in the year 2015, having been suspended in the year 1985. It was charged at 5%, but since the 1st of January last year 2023, it was increased to 15%. Number 4. Stamp duty. Provided for under the Stamp Duty Act 480. This is a tax payable on various instruments relating to land, such as transfers, charges, and lease on land. The rate of stamp duty is based on the instruments, the use of the property, and the time of payment. There are various exemptions to payment of stamp duty. Some of them are when conducting transfer of land to charitable organizations as gifts, or transfer of property between spouses. Now, I beg to ask the question, who introduced the concept of taxes on land? In the ancient times, different taxes were introduced to raise revenue for the growth of empires. By this, I'm drawn towards the 11th century. And who do we find here? King William the Conqueror. Now, William the Conqueror created the array form of land taxation. In this age, town officials kept cadastral records for everyone who owned property. Each parcel was measured and its value was estimated. Each town kept a book of the assessment of each property and the total amount of property tax due for each person. There were consequences if one did not pay the tax, which led to the book getting the name the Domesday book. That's all for today. Thanks for watching. Don't forget to leave a like, share, subscribe for more content. See you on the next one.